There's a lot of great economic data this week, but the Fed's favorite measure of inflation, PCE, personal consumption expenditure numbers, will come out tomorrow. And with that said, from the words of Mrs. Doubtfire, help is on the way, dear. Initial jobless claims came out showing people that were asking for benefits for the first time. It was down 3,000 to 192,000. And continuing claims was down 37,000 to 1.65 million. With the initial jobless claims and the unemployment report from last week, we've obviously seen a big spike in rates over the past couple weeks. So all this means right now, with low unemployment being at 3.4% right now, the lowest we've seen in about 50 years, all of this has caused rates to rise. We're near 7% again on a 30-year fixed for the national average, but help is on the way. We will see some reprieve soon. For all of the talk about the economy and the housing market, for that matter, being unhealthy right now we're still at the lowest levels for foreclosures and delinquencies. We have a 1.9 month supply of homes right now, which really is keeping everything propped up right now with such low inventory. Even though rates are higher right now, we're still seeing that prices are going to stay stable right now because of the fact that there is such low inventory. The second reading of fourth quarter GDP numbers came out showing that the economy improved by 2.7%, which is good news. And like I said in the past, we are going to see coming in March, April, and May, we are going to see some better readings on inflation, which I do think will bring rates down. Long-term rates will come down in that time frame. It's just going to take some time. There's going to be some bumps in the road along the way, but if we stay with it, with these new reports coming out, we do think unemployment numbers will shift a little bit higher, along with unemployment or with inflation coming down. The combination is going to help us see more bond-friendly rates coming soon. In great news this week, the Biden administration passed legislation to drop the mortgage insurance on FHA loans down 30 basis points. So from 85 down to 55. And if you're putting 5% down, that number goes from 80 down to 50 basis points on the mortgage insurance, which on average is going to save people about $117 per month. Great news as well for VA loans. They are actually going to drop the funding fee 20 basis points on average. So for a first-time home buyer, VA, 100% financing, the new funding fee will be 2.15%. And if it's a subsequent use, someone that's getting another VA loan, you're looking at 3.3% now, on average down about 20 basis points. We do expect some volatility tomorrow when the PCE numbers do come out. And with inflation being on the rise and with all the technical data we're seeing, if you're about to go under contract right now, we do suggest locking in your rate today before midnight. So if you are going under contract or about to get something under contract today, give me a call before midnight. I can help you out with that and get you locked in today. I don't know how Mrs. Doubtfire would say it, but this is how I say it. I'm Jeff Zuloff, and that's your Mortgage Minute.